All right, you guys can see my screen, right? And my chart.
Yep, yep.
Cool. So, pretty chill day today. Just took one trade. I did miss one in the beginning, which I was a little salty about. I was telling Kia earlier, but it is what it is. That's on me. I was busy. I could have made myself more available, but it is what it is. So, I'll just go from the beginning of the day to when I took my trade. So, at least for those who do know, for the 15-minute orb or 15-minute opening range break, the version that I personally prefer is the retest version, which I have specific criteria that I look for. While you can just take let me go on the 15 minute. While you can just take the 15-minute break as like a continuation or reversal, like the strat, while that setup does work, it has about a 75, 85% win rate. Last I checked, about 82% win rate. However, one that has an even higher probability is the retest version that I find a lot more efficient personally. So what I'm going to do is as soon as the first 15-minute candle closes, I'm going to mark off the high and the low, as we can see here. Let me actually replay this. So mark the low and the high of the first 15-minute candle. Then I'll drop down to the 5-minute, and then I'll look for a 5-minute candle to close below that level or above it. However, I need that 5-minute candle to create displacement or a fair value gap. For those who don't know what a fair value gap or what displacement is, a fair value gap is the point in between the wick of the prior candle and the current, and whatever candle came after a big candle like this. So the fair value gap, the gap would be the levels or the price in between. So this, I'm taking this candle, and this. So these three candles, one, two, and three. This is the first candle. I'm taking the bottom of that wick, and then I'm snapping it to the top of this third candle. That's a fair value gap right there. It's the gap in between the first candle and the third candle in that set. And of course, there's a little fair value gap right here in this big candle that was made from this wick to that wick, and there's a fair value gap there. Don't ask me to explain exactly what a fair value gap is because I don't really understand it or know how to explain it in the ICT way. All I know is what it looks like. It's pretty much just a gap in between wicks, between candles, like this. Now, displacement, we can use that term where it's displacing something, right? You throw a rock into the pond, it's displacing the water. Water's, kind of a rippling all over the place now. However, in trading, to kind of bring it back to that, I'm looking for displacement. I'm looking for a candle to displace the 15-minute level, meaning right over here, there's buyers sitting in this area. So when I have a candle that creates displacement, like a big candle like this, and then if it gets a fair value gap, it's letting me know that all the buyers that used to be here got displaced or got killed by the sellers. Because if buyers were still there, we'll get some wicks getting bought up. And I'll show you guys an example. Anyway, going back to today, I didn't take this trade, even though it would have been lovely. So once I created displacement right here, as soon as this candle would have closed like this, I would have opened up a sell limit for a short at the 15-minute level. So trading YM futures, my trade would have looked like this. My stop loss is always 50 points for this setup. And my max target is always 100 points. You can leave a runner if you want more, if it gives that to you, but generally I just look for 100 points. If this trade hits, I'm done for the day. In today's example, unfortunately, because I missed it, it came back up, it tagged us in, and only went against us by 2 or 3 points, which is like $20. And then I proceeded to get obliterated and hit my 100-point target. I take profit every 40, 50 points, by the way. So you can start taking profit every 40, 50 points on YM. It would hit both my targets at 50 and then 100, and I would have been done for the day. However, like I mentioned, I did not take that, unfortunately, but it is what it is. There'll be more setup to take. Does that make sense? That setup before I go into an example on what we wouldn't take for this setup?
Makes sense.
Sweet. So let's go to, all right, this was yesterday. Or was it yesterday? Yeah, this was yesterday. There's more of a TTO, but well, let's look at it with the eyes of the 15-minute orb. So this is the 15-minute high, 15-minute low. Where is my thing? So even though we got some displacement here, I don't like this wick on this 5-minute candle that closed above that level. Let's go back here. We can see the candle from today. While it has a wick, it doesn't have that big of a wick, right? So going back to the one yesterday, while yes, it can be valid because it created displacement here, I just don't like this wick because it's telling me there's some sellers that are present, which I personally don't like. Even though this trade would have worked out if you took that trade, stop loss is 50 points, max target is 100. Even though it worked out, I wouldn't have taken this trade because it's not the absolute best version that I want. And if it's not the best version I want, I don't care to take it. I was telling Kia I didn't take any trades futures wise anyway. I took some option swings that I was closing yesterday and Tuesday, but other than that, I didn't open up any trades because I want the absolute best ones. And if it doesn't appear, I'm not taking the trade. It's not going to be worth my time. And I rather take higher quality setups than just trade just to trade. So even though it worked out, I would not have taken it because again, I don't like this wick right here, and I'm very, very, very particular on what I like. We did get a nice TTO here over there, or over here, off this like red hammer to the upside. This is a TTO as well. I just wouldn't have taken it because these big wicks, which I don't like, at least this wick, and that wick. But for the most part, even on this wick on the trigger, I'd rather it be a hammer or like a little more solid or a 2-1 or 3-1, whatever it may be, but just not a candle like that. Let's continue. Does that make sense why I wouldn't have taken that one? The one up here compared to the one today?
Yes.
Sweet. And you'll see other examples like even what happened here? So this is the 15-minute low. So we can see here from yesterday or from Monday or Tuesday rather, this is a 15-minute low. We didn't get a candle that closed below that level. We just bounced off of it and then reversed back up. So I want to see the displacement occur. If not, I'm leaving it alone. Said the trade that I did take today, which was fantastic, was the W, which I'll show you guys later on. This prints on all the indices and even regular stock too. I just don't really trade it on regular stock. It'll print on SPY, QQQ, IWM, all that stuff. And if you trade futures, RTY, YM, ES, NQ, so on and so forth. I look for the W between 10 a.m. and 11:45 a.m. Eastern time. And then I'll come back in the afternoon at 1 p.m. and see if it's setting up on the 15-minute time frame. I only look for it in the afternoon at 1 p.m. to like 1:30 on the 15-minute time frame. I don't look for it on the 5-minute. So today on the 5-minute, as we can see here, we had pretty much almost perfect W. I would have wanted it to be a little more of an inside bar or a hammer or a 3-up, but I'll accept this. So step one, as I always tell you guys, a low of day is made from New York Open. We get the retracement back up. We head down, make a higher low, and reverse back to the upside. First target is the center of the W, and then when the W completes, that can be either all the way up here or it could even be up here, depending what's going on. So today's example, generally, I like to start taking profit when it's hitting the bodies of the candle in the center of the W. I don't like really taking it at the top of the wick, even though if it is a valid W, it's going to hit the wick. But sometimes what would happen is price will come up, it'll almost hit the wick and then reverse and die down and stop you out. And I'm not going to let $200-300 go red. So for today's example, I took some profit off at about 72, 71 points, which is about 350, 380 something and change for the first contract. Second contract, I took it off once it hit this body, which to me that would have completed the W, which happened right here. That one gave 154, 155 points. That's pretty much set. That was $770. Actually, no, whoops, $680, give or take, with the fees. So this was $1,000 trade today in less than 15, well, pretty much in 15 minutes. Granted, it was more than usual because the ATR is a lot more volatile than usual, but even then, $1,000 trade, 15 minutes. Don't gotta make it complicated. In this case, I use this as the W being completed because where's my tool? We can see it like this, right? And then we head back up and complete the W. You can also see it like from up here, market open, and W completing up here. But again, I'm not going to hold the position for almost 300 points with my full size. I'm going to be taking profit in the center area and when the W completes, whether that's here or up here. If it is a valid W, like in its entirety, it's going to make a new high of day, which as we can see here, that did not happen. It kind of died off later on. One thing to note for the stop loss, you can use the bottom right of the W like this, or the bottom left like this. Whatever is within your risk tolerance. Since I'm trading futures, I'm usually using the bottom right. For options, I might be a little more lenient and use the bottom left. Again, leave it up to you guys. One thing to note as well is the way you can conceptualize the idea of the W. As we know, this is pretty much just a bearish TTO once we get the reversal back down. But for the W, when we get the higher low and the reversal to the upside, that's telling me that the sellers are no longer in control and the buyers are in control to bring it back up. So the W is just a failed H pattern turned into a W. You want to give it some meaning or a story behind it. So that was the only trade that I took today. There was as we can see here, around 1 p.m., when the W printed on the 15-minute time frame, same exact thing. You could have went, well, assuming you got on at 12:45, which I wouldn't have taken this since I don't trade from 12 a.m. or 12 noon to 1 p.m. If you came back at 1 p.m., you could have caught this 3 up. So you would have went long here. Stop loss would have been on the bottom right. This stop loss is a little wide for me futures wise. That's 121 points. That's about $700. No, about $600 loss per contract. That's a little too high for me. I'll probably reduce my size and use micros. But anyway, in this case, we can see for the 15-minute, it came up and hit the center of the W. off that 3 up. So you could have taken profit around this area, 79, 80 points. Yeah, you could have went for the wick. Again, I don't prefer the wick in case we get sold off. And then you could have taken profit at this body, this wick, or this wick for the second target, which it hit on this candle. And then it got reversed and obliterated for the rest of the day. So that was it for futures. Like I mentioned to you guys, this prints on options as well. If you were trading SPY, it gave you an even better setup. It gave you a 2-1-2 up, super clean with a higher low. If you trade IWM, same thing. This one gave you a 2 down, 2 up reversal with a higher low. For people who trade QQQ, 2-1-2 up like SPY. If you trade the Dow Jones options, 2-1-2 up. So all the setups for the most part that I teach you guys, they're universal. You can use them for anything you want. Options, futures, Forex, crypto, it doesn't matter. These are all universal setups. We're just applying whatever we're trading to the setup. Any questions on that? Cool. Any trades that you guys took today that you want me to look at? I guess everybody took the day off because they made so much money yesterday. You wish. If it makes you feel better, Breg, I didn't catch any of that move to the downside yesterday because I don't trade the afternoon, and I definitely don't trade on FOMC in the afternoon. So the way I make myself feel better is, hey, it doesn't matter because you don't trade during that time anyway. That's like me being upset every single day because an SPX contract went from $10 to 1,000, which happens basically every day. But I'm not there to take the trade, so who cares? But yeah, if there aren't any other questions, thank you guys for coming out. Tomorrow at 11 a.m. Eastern time, if you guys can attend, that'll be nice. I'm not sure how it's gonna work. It's gonna be like a YouTube collaboration thing that I'm doing with Tradefulness. I posted the link in the general chat. You can just use this YouTube link to join it at 11 a.m. Eastern. We'll just talk about some trading psychology stuff, some tips and tricks that you guys already know, but as a good refresher. So if you can pass by, hey, definitely do it. And yeah, you can just click on that link and we will all attend. Other than that, that's all I got. Enjoy. Oh, before I forget, for the ones who came in later on, tomorrow is OPEX, which is options expiration. That's when the monthly expiration date for the contracts expire. And it's also the expiration date for the futures contract. So expect a lot of volatility and potentially not clean price action. So don't force anything tomorrow. If it's not clean, take your time, take your best setups, and we will go from there. Other than that, I'll see you guys on the internet. Message me, and if anything, I'll be around. And enjoy your night.